It wasn't too long ago when the Internal Revenue Service, IRS, assured us that they were going to hire 80,000 new tax agents to help pursue wealthy tax cheats. The IRS's definition of wealthy tax cheats was anyone making more than $400,000 per year. To fund this endeavor, the Inflation Reduction Act provided an additional $80 billion in funding to the IRS. The money was supposed to be used to update the agency's outdated IT systems and hire more customer service employees to reduce wait times when calling the IRS. However, earlier this year, Congress voted to reduce the funding to nearly $60 billion, and the focus of the IRS's plans may have shifted. During a recent hearing on Capitol Hill, IRS Commissioner Danny Worrell mentioned that the rate of tax audits for those making under $400,000 per year is likely going to rise. This is a significant change from the original promise to target high-income individuals and corporations. So, what's driving this shift in IRS priorities, and how might it affect lower-earning Americans? The IRS originally pledged to increase tax enforcement on corporations and high-income filers, referring to them as wealthy tax evaders. But let's dig deeper into the issue. The promise not to focus on taxpayers making less than $400,000 per year, while a noble commitment, may not have a clear definition in practice. The IRS has been using the term high-income earner rather loosely, with no common understanding of what it actually means. In fact, reports suggest that the IRS still uses $200,000 as a threshold to identify high-income taxpayers. So, anyone might have an equal chance of being audited. While the IRS may not have a clear system in place to effectively distinguish between taxpayers making more than $400,000 and those making less, they do use certain criteria, such as employment type and tax deductions claimed, to determine audit likelihood. So, it's essential to understand that the promise not to focus on those making under $400,000 doesn't guarantee that lower-earning Americans won't be audited. One of the main reasons behind the IRS wanting to conduct more audits is the tax gap, which is the difference between taxes owed and taxes collected by the government. The latest data suggests that the tax gap has been growing and now stands at a staggering $688 billion. With government spending increasing rapidly, the IRS has strong incentives to use its newly hired resources to conduct more tax audits. The IRS commissioner stated that he hadn't instructed the agency to deliberately include lower-earning taxpayers in audits, but he also didn't provide a direct guarantee that they won't be targeted. He emphasized that the additional funding wouldn't be used to hire more agents than the agency needs, given that they already have 990,000 employees and don't require more than 100,000. During the hearing on Capitol Hill, the IRS commissioner confirmed the agency's plan to hire 8,000 new tax enforcement agents by 2025. In addition to an increase in employee resources, it was reported in September that the IRS is now using artificial intelligence, AI, to assist with tax audits and tax returns. AI is helping the IRS identify patterns and trends that could lead to major audits of large partnerships, such as hedge funds, private equity groups, real estate investors, and large law firms. This raises the question of whether the IRS is using AI for all taxpayers, including businesses and individuals. While the article specifically mentioned partnerships, it's possible that the IRS is using AI to some extent for a broader range of taxpayers. In a time when tax revenue is declining and government spending is soaring, the government is likely to utilize all available resources to enforce tax laws. These changes in IRS priorities highlight how quickly rules can change depending on the desired outcomes and agendas of the government. It's a complex landscape, and lower-earning Americans should be aware that the rate of tax audits might indeed increase this year. The IRS's commitment to targeting high-income individuals and corporations has evolved, and it's essential for all taxpayers to stay informed and understand their tax responsibilities. Please share your thoughts and experiences in the comments section. Have you encountered any changes in IRS audit rates, or do you have concerns about the shifting priorities of the IRS? Your insights can be valuable to others. In summary, The IRS's plans have evolved since the initial promise to focus on high-income individuals and corporations. While there's no clear definition of a high-income earner, lower-earning Americans should be prepared for a potential increase in tax audits. The IRS is driven by the growing tax gap and is now using artificial intelligence to assist in identifying potential audit targets. It's crucial for taxpayers to stay informed and understand their tax responsibilities in this changing landscape. Disclaimer: this content is for informational purposes only and should not be considered as financial or legal advice.